Welcome back to the channel. My name is Patrick, and in today's video I'm going to talk to you a little bit about price action. Then I'm going to back test my strategy, and we're going to see how consistent it is over a 10-day period. Okay, so before we get into that, I'm going to quickly show you what price action is. Okay, we know the market moves in a certain way, and most of us know it as a trend. Okay, I know it as a pole and flag. You may know it as a trend, whatever it is. Basically, the market doesn't just move in straight vertical lines. Okay, it doesn't go straight up, it doesn't go straight down. It moves in like a zigzag formation, going higher or going lower. Okay, so this is what we're going to talk about. This is price action. Okay, so I've got two examples here of a downtrend, and here's an example of an uptrend. Okay, so we need to understand this so we can apply it. And once you understand this, you do not need indicators. This is the only thing you should be looking at. This is the only indication you need. Is price trending down or is it trending up? So I'm going to show you how to read the charts with no indicators, just reading it through using price action. Okay, so you may need your notepads for this one, and you're going to get a lot of value from this one. So you might as well hit the like button already. If you haven't, you might as well hit it now. And if you're not subscribed, you might as well subscribe now, because I've got more things like this coming in the near future. Okay, so let's get busy. So here we are, downtrend. So we have, now this is visible on any time frame. Okay, so forget time frame for now. I'm just going to show you what a downtrend looks like. Okay, you can see on a higher time frame, whether it's a daily, H1, M5, M15, M1. How you read the charts, or where you prefer to read the charts, is a preference. Okay, but in every situation, price moves like this. It varies, but it moves like this. Okay, so we have a downtrend here. Okay, so we have a high here and we have a low. Okay, then we have a lower high here. Okay, so it pulls up and it stops there. It does not get above this last high, so it's a lower high here, and then it pushes down again and gets underneath this last low, so this becomes a lower low. Okay, so high, a lower high, a lower low. Okay, so it pulls up here, doesn't beat this last high, so this becomes a lower high again, and it pushes down further, breaking this last low and creating a lower low. We have a downtrend. An established downtrend is when you have one pole, a flag, a second pole. You need that to even consider it a downtrend. Okay, and this last one, this push up, should respect that, and then you should get that drive down. Okay, now there's a lot of manipulation in the market, so sometimes this could push a little bit further, it can mess around like this, it could consolidate, it could go sideways. We're not talking about consolidation for now. As you can see, there's a lot of consolidation here. It happens, it's just a part of the market. When there's low volume, price just goes sideways. Okay, we're not talking about that right now. Okay, so forget about manipulation, forget about consolidation. We're talking about price action, reading the trend. Okay, so a pole, I know it as a pole and flag, so pole, a flag, a pole, a flag, a pole. Okay, so these little pushes up, these triangles, are flags to me. Okay, so if you imagine a checkered flag, you've got a pole and you've got a flag. This is an upside down flag. Okay, so that's technical analysis. You may hear the term when someone's talking about the charts. Okay, so that's what they're referring to, pole and a flag. Okay, so pole, flag, pole, flag, pole. Okay, that's our downtrend. Here we have our uptrend. It's the same thing but in reverse. So we have a low here, a high here, a lower high, a higher low, a higher high, a higher low, and a higher high. Okay, so this low here, this low here is above this low, so that's why that's a higher low. This low is above this low, so that's why that's a higher a higher low. Okay, so I get confused a little bit, but you know what I'm trying to say. So high, low, a higher high, a higher low, and a higher high, and that's how that moves. Okay, so that's a downtrend, that's an uptrend. This is what consolidation looks like. It's not going up or down. And then there's one more state in the market, which is a reversal. Okay, so this is what I trade. I trade the beginnings of reversals. I do not like to get into a trend when it's all the way established up in here. I do not like to get into a trend when it's all the way down here. I like to get in at the beginning because it gives me the best chances of success. It gives me a better win rate, a better risk to reward, and so on and so on and so on. Okay, so it makes sense to learn how to read the charts and learn how to find the lows or the highs, the beginning of the moves. Okay, so what does a reversal look like? So we got a downtrend here, we've got an uptrend here. Let me show you what a reversal may look like. A reversal here will then go up here, pushes down here. Now we're downtrending still, so when this pulls back up, we would expect it. Let's just extend this here. When this pulls back up, we would expect it to respect this last high here, and from this point push down to beat this last low. It doesn't. It stops here and it beats that high. Okay, once it beats that high, it's starting to reverse. It's starting to change direction. That is a break in structure. This is the structure we had. At this point, it's still within its range. It's still going in the same direction. At this point, it's broken structure. Okay, when it beats that last high, it broke structure. Not here, here. Okay, so once it's broken structure here, we would expect it to pull back, respect its last low here, and then move up. Okay, that's what we would expect. Sometimes the market may pull it all the way down here, then go up again. Okay, now there's a number of reasons it could do this, but let's put it plain and simple. Let's apply supply and demand in this. It's a better price down here. Okay, and maybe manipulation. It wants to run at anyone who got in with a tight stop loss here. So it happens. Okay, so that's why when I take my trades, when I start the move, my stop losses are at the beginning of the move, where the move changed direction. That's where my stop losses are, because this could happen. Okay, all right, we got this out of the way. I think you understand what I'm talking about here. I'm going to show you some examples, and I'm going to try to do this quickly because I'm trying to keep this video brief, because there's a lot of examples I've got for you. Okay, so let's get started here. Okay, so that's what you know what we're looking for. We're looking for the beginning of the move. Okay, so what I'm going to do, I'm going to put some rules to this back testing. I am looking for one trade a day. I'm only looking to scalp it, and I'm doing a one-to-one. It does a lot of times it goes further because it's the beginning of the move. So a lot of times it goes further than a one-to-one, but I'm only doing one-to-one because that's how I prefer to trade at this moment in my trading journey. Okay, I prefer to just take a one-to-one and leave it. Okay, because I'm not comfortable leaving moves for multiple hours and waiting to see how it progresses, because it messes up my day and it plays with my emotions. So I leave it for one-to-one. So we're looking for one-to-one. I'm looking for one trade, and I'm only trading the London session. Now this setup is available in the Asian session, it's available in London session, and it's available in New York session. But I'm only trading London session because that works with my schedule. Okay, I don't want to be up early in the morning looking for moves in the Asian session, and in the New York session I'm with my children. I don't want to have that have trading impact my quality time with them. So London session, one trade a day, one-to-one, and let's say we're risking 1% per trade. It doesn't have to be 1%, it could be whatever you want. Okay, so let's get into the examples. So here, Asia session, we are trending up. So we have a low here, a high here, a higher low, a higher high, and as you can see, it's just respecting these lows. Okay, so let's just zoom in a little bit. Okay, so just respecting these lows. So we have an established trend which started down there in the Asian session, and it's just been respecting these lows, pushing up. Okay, at this point here we have a push up. Remember, respecting this last low, it pushes up and then it breaks the structure because this point here gets underneath this low. So that's our first break in structure here. Okay, see, it breaks structure here. So we'd expect price to pull up and push down again. So that's our first pole, that's our first flag, and that's our second pole. So now at this point here, I would expect price to pull back from this point here. I would expect price to pull back here, tap into this zone, anywhere in this zone. So from this high, let's just 1 second. Let's just move that. So from this low, sorry, pulls back in there, tap into there, and I'll expect it from here to pull out again. Okay, so respecting this last high and definitely respecting this last high. Okay, so my entry will be here or at this pivot point here where it broke structure. Okay, so my entry will be here and I'm risking 11 pips and I want a 1-to-1, and as you can see, I do not get it. I get 6 pips and then I get stopped out. This is a really bad way to start, isn't it? So this is a really bad way to start, but it's really good to see, because you can see now this strategy is not 100%. No strategy is, okay? But this strategy has been very consistent for me, and I'm going to show you why. And we're going to carry on, okay? So this here is our first losing trade here, okay? I actually took this yesterday and I took that loss, okay? No problem, okay? So let's move on. Let's go to the next day. Let's say we've taken only that one loss for that day and we left it there. Okay, let's go to the next day. So same thing applies. Asian session here, and we are trending down. We have a high here, a low here, sorry, a high here, sorry, a lower high. So that's a lower high. We have a lower low here when it beats this structure here. So it's trending down, okay? This is the move. So at first it was trending up, broke structure here, started going down. That would have been the Asian session reversal. I don't trade this. If you do trade Asian session, that's your move there, okay? I don't trade this. I'm asleep at this time. So at this point here, I'm awake, okay? London session starts here according to this time frame. London session starts here, okay? That is when I'm active. This is when I can see what's going on in the market, and I probably, to be honest, I'm awake at this hour, okay? So I'm not taking a trade to continue this trend down, okay? I'm waiting. I missed the start of the move. I'm waiting to see a reversal. So it's trending down and it comes down here. And in the London session, what we have is not a continuation. We have a break in structure again, okay? So here we have our break in structure, okay? It's our reversal. So we have our pole. We've been pole flagging all the way down. Pole, flag, pole. Flag here, poles out, okay? To continue its trend, it should pole, it should flag here, hold here, and go again. It doesn't. It reverses. It breaks the structure here, breaks that high, that last high there. It breaks it by just beating it. It just beats it there, pulls back in here and breaks it again. This pullback is very important. This flag is very important, okay? This to me is, first, it's a confirmation of a new trend. It's a change of direction. But if you have a move where it hits, goes here and just goes straight off, and you don't see this little flag, at least on the 5-minute chart, I don't trust that move, okay? This could be just price pulling up here to get a better price here and then continuing its downtrend. I need to see this little flag here, okay? The way I see it is, this is the market makers, or the market movers, should I say, this is their way of protecting their position, okay? They broke the structure here, they pushed price up, Price tried to come down again, they pushed it up again. They refused to let it go lower because they're protecting their position where they got in here. Okay, so that flag is very important. If you don't see that flag, or we don't see this flag in this back testing, I'm not taking that trade. Okay, so all the examples I show you have a little flag before the change in direction. So our entries here, because we got this flag, we've got breaking structure here. As you see, price comes back in, just respects that low. Okay, respects that low. Remember, it can go further down to get a better price, but it respects that low and it pushes off. Okay, my stop loss is at the bottom here. Regardless, some people would place their stop loss just there, have a tighter stop loss for a pip, and that's how they are able to get a nice return. So that's 40 pip point move, 40 pip move, risking 4 pips, 1 to 10. Right? That's how they're able to get that. Me, I don't care about pips, I don't care about that. I'm doing 1 to 1, and my best place to place the stop loss is at the beginning of the move. This is, let's call that 14 pips. So a 1 to 1 here, 14 pips. We get that very easily there. Okay, so now we have our win. Okay, so that's a win. Let's keep moving. Okay, so let's go over to this price action here. So Asian session again, same thing applies. We have a low here, a high here, a higher low, a higher high, a higher low. See just above there, a higher low, a higher high. So it is trending up during the Asian session. We get to London session. This happens a lot. London session may want to reverse the Asian session. Sometimes it wants to continue, but often different sessions tend to reverse what's gone on in the previous session. Why? Because of the liquidity. We know if anyone's in the Asia session still holding their positions, they're trailing these lows. They're moving the stop losses, trailing these lows. London session wants to take those lows. Once it takes them out, that's how the money is made. Okay, that's liquidity. Okay, so for anyone to make money, someone has lost money. You need to remember that. Okay, so that's why these reversals, I prefer to trade them, because this is the London session deciding to go run liquidity there and change the direction for whatever reason. Doesn't matter, that's speculation. All I know is price action is what I'm after. So what we got here, we're trending up, and this is our last high, no, our last low, last lower high, pushes it, creating a high, then it breaks structure there. So as you can see, this point here, it beats it. We need a flag. Do we get a flag? Yes, we do. We get a flag here and another break in structure here. Okay, so from that point here, it's broke this structure here. So when price starts here and pulls back in here, that's our entry. Our entry again is based on the breaker structure. Yeah, enters in there and we can enter here. Now, if you trade ICT or SMC, you probably are familiar with this. This is what you would call a I don't even know your terminology, to be honest, but you are familiar with this. You would be looking to enter here and you're writing it down. Well, you call it a fair gap, a fair trade gap. Well, hit me in the comment section if you know what I'm talking about. But anyway, so let's get back to what I'm saying. So our pole, our flag, our pole, it pulls back here, taps into there, and it goes off again. Okay, so 1 to 1 from this low here to where my stop loss should be, 11 pips, call it 12 pips, and I am looking for 1 to 1. I get it there from that third push out, and as you can see again, this move goes on, it goes on all the way down to the end of the trading day. New York session reverses it. So that's 54 pips. Okay, so easily get our 1 to 1 there, we get a 2 to 1, and we get a 5 to 1 there. Okay, so let's keep moving. That's another example. Let's keep moving. We have a example here. So trending down here, this is an awkward one, but that's a big pole, flags, doesn't pull out, comes actually breaks that. Then is it reversing up? No, doesn't beat that high, comes and breaks that. It's just a bit awkward, but nonetheless, from this here, high, low, a high, eventually a low here, and then a high here, and this should then break out, create another low. For me, it holds here, so from here it should break out, create another low. It holds here. Let's move this out of the way. So in this backtest, I'm trying to be as honest as I can be. I'm not trying to, manipulate it so it looks great. This for me is a breaking structure when this high gets beaten by this. Okay, so it pulls there. This is how I would have read it. It should be that high to get beaten, to be honest. Now I see it, but anyway, we're here because that's our flag, our pole. This should flag here and pole out again. It doesn't. It breaks structure there, beats this guy and beats this guy. That's a breaking structure to me. It poles back here. It did create our flag, so our entry should be here. So when it moves back in here, our entry is there. Our low should be here, and we are risking 10 pips, and we are looking for a 1-to-1, and we get 5 pips, and we get stopped out. Okay, so that is a loss. Okay, so it happens. Okay, that's 2 losses now. It happens, and as you can see, price did later go up. Okay, I think I took that loss, then I went to GU and I got that win, but that's a different story, and if you watch the previous videos, you've probably seen that already. Okay, so now let's move on. Actually, this is a good point to end the video, and I'll do this as a part 1, and I'll release a part 2 to this price action backtesting session that we are doing. So if you found this useful, hit that like button to support the channel, hit the subscribe button so you are notified when I release part 2, and you'll be able to see how this concludes, what the win rate is, and you'll be able to see more examples of this strategy in action. Okay, this is Patrick signing out, and until next time, peace.